Good day, everyone. Well, as we not surprisingly saw, the Fed is covering themselves on both sides. Yes, the majority of them are pushing for a rate hike as possibly as soon as September, but most likely by the end of the year. But that, of course, is predicated on a recovering economy. And the markets have been stuck in this sideways move for a long time now. The Nasdaq just bounced off its 10-week moving average, and the S&P and the Dow, of course, they're trading lower by comparison, as the Dow and the S&P are both under their 200 moving averages. So you've got a tough position the Fed, of course, is in right now. I mean, we've been talking about this for a number of years, actually, with all this QE being, the quantitative easing phenomenon of money printing is really a stopgap. It's putting a Band-Aid over a very infected wound, and that Band-Aid is not going to cure the wound. It's going to probably make it worse because you're not allowing the wound to heal on its own. And so we're seeing, I think, the market's getting quite tired of the QE phenomenon. They've just been in a sloppy, trendless mode for many months, and it's choppy as well. It's not quiet. The last time that the S&P was so sideways was in the 70s, but that was a very quiet sideways move. There was very little volatility. I remember O'Neill telling me there wasn't a whole lot to do because you just didn't get too many stocks on the buy or the short side doing much of anything. But in this kind of market, you can fortunately make money on both the short and the long side because of this volatility. But if you try to time the markets, there's nothing to time. I mean, these things, when they look like they're falling apart like they are today, this has happened many times before. We see a number of stocks get chained, and then QE to the rescue, and the markets find their floor. So that said, we have seen a lot of stocks give up the ghost in this latest downturn. And the short side has been profitable to some extent, but of course the long side has been profitable this year in the right names, as our reports have borne out. But in the meantime, actually, if you take a look at, I was just saying that the Fed is very much about making sure the economy has recovered before hiking rates. And Yellen and the other Fed board members are doves. So they're not going to make any jerky decisions unless the economy really has to show good health or good recovery, and we're not seeing that around the world. I mean, not just in the U.S., but all the majors are just having a tough time of things. Look at China, look at India, look at Europe, look at the U.K. And if Gil, you could pull up it's the Commodity Research Bureau index, and if you go back,
is that it?
For 25 years of this chart, you'll see that let's see, wait, DBC. Oh, that's the ETF. Yeah, I'm looking at the actual, it's the Reuters CRB index, the one that.
Oh, okay.
That is
an alternative symbol? Does anybody out there know an alternative symbol? I mean, does that show the picture you want?
It doesn't really. It's not a. Let's just say, yeah, this is actually good. I like this. That chart right there is good. The DBC, it basically mimics the CRB index, and you'll see that. Well, if I look at the CRB index, you'll see that the slope on the CRB, basically by September, it had 3 months of just complete collapse over 3 months, and you could say the equivalent is happening now. That's not to say we're going to have a repeat of 2008, but it is interesting that there is a parallel between what commodities were doing prior to the crash of 2008. In other words, they were completely tanking, and what they're doing now. You can also look at the price of oil. Actually, if you type in USO, that's good as any. But if you look at the long term on these things, the price of oil has never come apart this quickly. So you're seeing kind of a replay of 2008 that started in July, August, September, where the commodities just got, they went from straight up to straight back down. And then, of course, in October, November, December, then they fell even further and faster. And then you can see the same kind of pattern on the Commodity Research Bureau Index is, 3 months of straight off the top. 3 months by the end of September, it was down appreciably. That's kind of what we're seeing right now. And then, of course, we know that commodities just fell through the floor in October, November, and then December. So I think the commodities are telegraphing to the world that something is definitely not right. Yes, there is less demand. Yes, countries are in recession or approaching recession, but still, this is an abnormality, a complete magnitude. Because if you look at Commodities Research Bureau and you go all the way back to, I can go all the way back to 1975 here. And there is the only times that commodities have fallen so fast was in 2008 and now. So I think that it's an interesting phenomenon that's going on, and I think that the Fed is going to have their hands tied, because I think commodities are saying that the world is not all well at all, and there's just jawboning. They want to be able to have an outlet to be able to say, yes, we're going to raise rates now when the time is right. So they're kind of like letting the air out of the balloon slowly, because the balloon has been overinflated. But I think they know full well that they're not actually going to raise rates probably till next year, or even after that. It all depends on when the economy starts to turn that corner. But the Fed is a political body, so they have to manipulate the markets with their words, with their language. So it strikes me that that's what's going on right now. So in the meantime, let's continue to take advantage of the volatility in the market, because that means that certain stocks will be actionable on the long or short side. And as far as the timing of these major averages, that is a different story. As I've said before, that's not where the low-hanging fruit is right now. So when the model issues a signal change, it's sitting in cash right now, because really it's just nothing but chop and slop. But when it does go to buy or sell, I would just be modest with your position sizing, and I would reserve more of your capital for stocks. But we've seen that all year, and we saw that last year as well. So again, there's profit opportunities, but asset allocation, as always, is quite important. And with that, I'll turn it over to Gil.
Okay. Well, my message is the same as it was last week. Short side is a place to be, and I think that's pretty much an objective assessment based on what my screens, what my charts have been telling me over the last, well, pretty much throughout most of August. So I remember I went on vacation at the beginning of the year, and there was a couple of good shorts in stocks like SWKS. Well, I think I went on vacation back around the end of July and started making money on the short side. And you can see a number of these names have come off since then. That's when Apple started its breakdown that is continuing, and I think Apple's probably headed lower. I think I pointed out last week that what we might expect in the short term, and we'll see how long this lasts before it really starts to break down, because it is a late stage failed base, and it's failed outright, and you can see that there was a great deal of selling volume in the weekly chart here in the base. So I tried to break out once and then twice and then the third time, and that was it. So it's 3 and out, and you're finding support in this area of congestion in this base that was formed towards well, back in December and January, and so you bounce off of that zone up towards the 200-day line, but notice how each bounce, you had the first bounce cleared the 10-day and got up to about the 120 level, and then the second bounce, which occurred after a logical undercut and rally, couldn't even get up to the 20-day, and now the thing is rolling over. Yesterday it came down through the 10-day on heavier volume. So this is looking pretty grim, and I'm short Apple right now. I actually put it back out on the bounce. What I notice, just as a sideline here, when you're working shorts intraday, and I come in pretty heavy short overnight, and the market's breaking, usually in the first 1 to 2 hours, you'll see the market start to break real hard, and it looks real ugly, and your impulse is you want to short everything on the planet right at that point. That's actually when I'll start taking some off the table. So if I come in, say, 200% short, I actually dropped down from about I don't know, maybe 170, 180% short, somewhere around there, up to 200 coming in this morning, and then dropped down to about 50% short a little while ago. And then we got some intraday bounces that I re-shorted into. So I'll just give you an example of how I'll work this on a 620 chart. And I know somebody was asking about what a 620 chart is. I only like to discuss it in a few select places. It's not for general consumption, and I did not put it in the new short selling book. It'll have to come in the next one. But the other thing is that I consider this to be a device that tends to work right now. And the whole thing is derived from my studies of Forex, or foreign currency trading, on an intraday basis, and some of the patterns I notice. And, you know, I don't know why this market seems to act so well in terms of how this chart can help guide short sales. But in any case, you start to get a streak here. You get a MACD stretch. So when that starts to happen, and it seems to be getting down there, I'll start to take profits. You get a bounce up to the 6-period line up in here. It starts to roll over again. I'll come back in and hit the thing short again. So same thing was the case with Apple, for example. You see the streak, you see the MACD start to stretch in here. You cover it, let it bounce, and now it starts to roll back up towards the 20 period. You can short it again. So I don't have any strict rules about where or what, you know, exactly on the chart I'll put a position out. This is not a mechanical system. All I'm using here is a 6-period. The orange line is a 6-period exponential, so that would be on a 5-minute chart covering 30 minutes, and a 20-period exponential with the blue one, and the MACD is set up as the same way, 629 and C. And there's no magic to any of these numbers. It's just something that I've worked out as a device, and it's not a system. I know some people want to apply this as a system, and they want to buy everything on a 620 buy and short everything on a 620 sell, but it's highly contextual, and it's just a guide, because what I'll do is I'll watch this, and if I covered a bunch down here under 112, and I caught that low pretty well, and I'm seeing it bounce up here, it gets close to this line and above the 6-period, I'll come and re-short it, and if it gets back up through on a 620 buy, then I'm just out of that piece of the position. I'm not being a stickler about exactly where I short the thing on an intraday basis. But I have noticed that you'll get a break in the morning, and then you can go ahead and bag some profits and look around and see what's rolling over again. You know, there's stocks working on the short side data, which ran into the 20-day a couple days ago, and now it's just rolling over. That thing is, I guess you'd say this is a left shoulder here. You got a pointy head, and now you're forming the right shoulder on a head and shoulders. And you're seeing these formations all over the place. I mean, you're even seeing it in well, let's use this one, the pec. There's a nice head and shoulders. Hey, Dr. K, what's the difference between this one and the FXI? Does this cover a broader portion of the market in terms of smaller cap names?
It's smaller cap.
Okay.
The PEC.
Okay, and I guess the FXI is the larger cap names, most of which aren't trading, right? Even though that's moving lower, I guess whatever is trading. But this all looks pretty grim. In any case, you're seeing a lot of head and shoulders formations, a lot of late-stage failed bases, even something like Palo Alto Networks, which has religiously followed the 10-week line all the way up, is finally busting it. And you can see here you get this cascading maneuver off the peak. I think we talked about this last week as being a short on any rallies up towards 50-day, I guess in this case the 20-day, the 10-day, whatever. It's now breaking to lower lows, or pushing that way right now, approaching lower lows, and looking pretty grim. So, you know, and here you can see that's kind of a head and shoulders. And here's, you know, the fractal part of it, left shoulder, the head, and then a right shoulder, a couple little right shoulders here, and it's busting. And it's probably headed to the 200-day line. In fact, most of these stocks that are breaking out are probably headed to the 200-day line, although Apple, as we can see, already broke the 200-day line. Facebook, I think I'm short that as well. I think I shorted it yesterday above 95. To me, that looks too obvious as a setup in this market, because on the long side, because everything's breaking down. And so my assumption here is that you'll see all the leaders start to break down. So even something that looks good is coming down. And I think Facebook suffers from the same thing that Apple does in terms of being in an over-owned situation. that everybody considers a must-own, sure thing type of stock, you know, and you're going to make money with it no matter what. You know, just like Carl Icahn was all, or has been all bullish on Apple, and that pretty much has marked the top, right? More or less, near the top. In any case, you can see a classic. This is I think just a classic pod type of situation. Here you have this is a 30-week pod roughly, and you can see here it looks like it got support a couple of weeks ago on the weekly chart here down at the bottom, and so you might think, oh, I'm going to buy it. You see this breakout, you're going to buy it, but what happens here is this is not long enough. If you consider that it had this kind of a big run, this little base here is not enough of a foundation or a launch pad to set up a move much higher. So and this is what you see in these pod or punch bowl of death type formations. You will see a very weak short base form up near the right side peak of the pod, and the stock will try and break out from there, and it fails, and that marks the beginning of the short sale expedition in the stock from that point. And so you can see I actually shorted into this move here. I just figured it's on, once it stopped on Monday, it rallied today. I figured you got a high here around 64 rather, and I'll just short it here, and it came down over the last couple days, and it's really busting. Probably heading for this low. I covered this on an intraday basis, and we'll see if I want to put it back out, but I would love to see just a little push back up into 57.30 at the 50-day moving average to re-enter it. But you can see now on the weekly chart, this is looking pretty damn ugly. So I'm watching Facebook breaking to lower lows right now. We're ready to push through the 92 level. I figure we're going to the 50-day line there. So anyways, quick assessment of the indexes. Just to give you an idea of where you're at on the short side, and I will keep an eye on this sort of thing. The S&P is approaching this low here, which coincides with this low here, and you're well below the 200-day. You're either going to bust this or you're going to undercut and rally. So you got to be watching this carefully, because if you do undercut and start to rally, you want to back off on the short side, bag some profits, and then look to set up again on a rally. Okay. Same thing here. The Nasdaq is approaching the 200-day. Maybe what it does is it cuts through the 200-day to fake everybody out, undercuts this, and then tries to bounce. So I watch where the indexes are in conjunction with where my short sale target stocks and positions are, and I'll operate on that basis, because I'm always working things on a short-term basis. I don't necessarily hold things for a long-term downside move. I will work a long-term downside move coming in and out on the way down. So anyways, do we have any questions? I don't see any questions out there. Gee, I thought you guys would be brimming with questions. Maybe you're all still long and you're all stunned like deer in headlights. Let's just look at some of these names on my list over here. So we went through Apple, Mobileye, Data. We looked at Disney. I love Disney because this guy on Fox Business telling everybody right here that Disney is a stock that you have to own for the long term. And that's a lovely thought here, with the thing just blowing to pieces and now busting the 200-day line. Probably a shortable gap down here. I don't know. I mean, look, it is now, you know, now that you can see it. But after it breaks, you bounce off of the 40-week line here, and you run into the 10-day. Could have been shorted there, and it rolls lower. But, you know, this market's kind of like throw a dart, and whatever you hit, short it, because that's kind of what you're getting into. We're down 219 on the Dow. Nasdaq leading the pack to the downside, down 89, 87. But notice how it's getting close. 49.12 and change is where the 200-day line is. So I'm watching that. And maybe we could do this. Add alert. We'll make it an even. Wait a minute. Got to be at or below. All right, if that hits, well, we're uh-oh. Something's not right. at the top. All right, let's see if we get this right now. Give me a second here. All right. Now I got the alert in. We'll see if it hits while we're still in the process of doing this webinar. You can see things trying to bounce now. So you're getting close to the 200-day line here on the NASDAQ. S&P is approaching this low. So I don't know if do we get an intraday bounce and then we head lower, or are you going to put in a bounce and rally and jack back up to the 200-day line on the S&P? I guess we'll find out, won't we? But in any case, let's go through some more names. Somebody says, been going to cash. What do you mean, been going to cash, Gar? You mean you're not already in cash? Now need to figure out when to short. Missed Tesla because of that. Okay, well, I don't know. Now you need to figure out what to, I don't know. I think you need to be figuring out what to short at the beginning of the month. And if you're looking to short now, you might be a little bit on the late side and not in an optimal position. But I think if we get into a bear market, which I think is a good possibility, and I'm not afraid to try and make some assessment one way or another. I think you got some serious issues plaguing the global economy, and eventually we're going to have a bear market. So I don't think you can assume that we're never going to have a bear market. I think it comes at some point. And so you ask yourself, what are the stocks showing you? And they're definitely showing you a great deal of weakness. So on that basis, further downside is probably in the cards for the market and formerly leading stocks, but it's going to be a volatile ride on the way down. So that's my general view. So I don't see why, if you're going to try and work the short side, you might be a little bit late right now. And if you're still moving to cash, I sure hope you got some big cushions in some of these names, because I don't see anything really holding up. On your alerts, are the group ranks based on O'Neill ranks? No. I don't, I don't pay a lot of attention to O'Neill data. I find it's generally pretty useless. I use HGS Investor software, and that's mostly what I operate with these days. I think most of the O'Neill stuff is based on a market that doesn't exist anymore. So maybe someday it will again, but I don't really pay any attention to a lot of the data. I just look at the charts. Somebody said the book you both recommended with meditation and mindset is fantastic. Can you hear me okay, Dr. K? Did everybody hear me okay?
You just came back now.
Okay. Yeah, I think our internet briefly shut off. In any case, somebody says the book you both recommended with meditation and mindset is fantastic. Which one was that? Can you review your Tesla short alert on charts? I don't have a Tesla short alert. But basically, you have a gap down after earnings. So you have a pod formation here. And here's what I'm talking about with respect to this type of setup, which is essentially that you see how you have a pod and you have a rapid run up off the lows. Okay. Now the key with any pod formation is that the rapid run up the right side of the pod, if it occurs in a very short period of time, is too rapid to be sustained, because you're not working out weak hands and bringing in strong hands by having periods of consolidation. So what it does is it gets into a loose pattern up here, tries to break out here, see that, and it fails, and that's the end of that. And what is playing out exactly like that now is Mobileye. You see that? So in a way, Tesla, as a, whoops, what am I doing here? Where's Tesla? Here we go. Tesla provided a model for Mobileye. See how that works? Seeing you thought investing was hard. I'm looking for some type of bounce to put on shorts. I think you're late, Gar. You know, I think you need to, and I think this is part of the process of learning how to short. You need to be more anticipatory, and you need to be more willing to work things when they're set up, not when everything starts to blow apart and it gets obvious, because you're subject to sharp snapbacks. So, as I was saying a little bit ago, what you're probably looking for now is a new set of rallies up into resistance to short into. So you have your shot on Tesla, for example. You have the gap down, and it drifts down, undercuts the low of the gap down day here. It turns back to the upside. It goes past the 10-day, past the 20-day. And a lot of this was helped along by Morgan Stanley coming out with a $465 price target, which is kind of ridiculous in my view. Looks like I'm getting... Can you hear me okay, Dr. K?
You're coming in and out.
Yeah, I don't know. I think maybe they're working on the cable somewhere down the street and knocking out. Am I in now?
You're fine now.
Okay. Great. Anyways, so you know your short sale point here was at the 50-day. So if you didn't step up and hit it there, guess what? You're kind of late. And maybe it breaks for new lows, maybe not. So, any other questions? Yeah, I just froze up again. I don't know what's going on here. This is great. It's a great day to do this. Can you hear me okay, Dr. K? Now I'm back, right?
You're back, yeah.
Yeah, this is getting a little annoying, I have to admit. Okay, so where were we? This thing's blowing. Anyways, I mean, you look around, Splunk, you had to short it the other day there. You know, Gilead. Here we go again. Boy, they're breaking this hard now. Can everybody hear me okay? Can you hear me? Okay. Maybe Time Warner's going under, I don't know. In any case, I'm going to make a couple of adjustments here. So my whole point here, look at Palo Alto Networks. He had to short yesterday at the 10-day line. Could have shorted Google yesterday, and it found resistance near the 700 area. So you have the century mark rule in reverse. And you know, there's just a slew of these, and they're already done. They set up, and you had to be short them already. So if you're looking to get short now, you know, you're probably running a little bit late. Can you hear me, Dr. K?
You just came back now. I was
Yeah.
about to type to
Yeah,
you.
I can see the internet just for some reason. Now we're coming back. Now we're not.
Yeah, I can hear you now.
Well, I don't know what to say. I mean, this is creating a problem for us. But the bottom line is, everything you needed to be short, you had to already be short. That's basically my message. So if you're looking to short now, you're late to the party as far as I'm concerned, and you're approaching levels where we might bounce. Can you hear me? I think what I'll do is, since the basic idea here is that you're kind of late to the shorts, I think what I'll do is put out a video later covering some of the short sale setups out there and what one might want to do given the issues we're having here with given the issues we're having here with the internet. I think we're gonna shut this down. Okay, Dr. K.